Hello, this is Steve Sanangelo from the SRS Rock Report with a new YouTube video called A Major Battle for the Silver Market, which would equal much higher prices. Now, today we are seeing a nice move in the precious metals. Gold's up significantly. Silver is almost up $1 at one time. But I do believe we may see a correction in the broader markets and the metals first before we see much higher prices in the future. So I'm going to talk about that towards the end of the presentation. But the dynamics of the silver market, there's four dynamics, and you can see those, which I'm going to talk about here. There's a four-pronged silver attack, and I'll get into what those dynamics are in this presentation. But before I do that, I wanted to talk about quickly this presentation I did at the SRS Rock Report for the gold members. It's the late Bronze Age collapse, and it's the amazing parallels to the coming collapse of the high-tech global economy. And there's amazing parallels from this late Bronze Age that took place between 1700 and 1200 BC and what's taking place today. And one of the very interesting things I talked about in that video presentation, that the research alone took a month to do, is this chart here. This is one of many charts I explain. And what people don't get, and I actually didn't realize how much energy it took in these ancient civilizations, the Bronze Age and then the Iron Age, and during the ancient Roman Empire. Cyprus, which was one of the main suppliers of copper in the late Bronze Age. In 50 years, I estimated about 10 million trees were cut down. So this is about 1/6 of the island. And now that's only half because they built ships, they built homes, they had to use wood for fuel, for cooking, and even for making pottery, a lot of different things. So it's double. So it's just amazing how much wood that was cut down during the late Bronze Age and actually the ancient Roman Empire. And we're seeing the same thing today with the massive amount of energy we're consuming to produce metals as well as the global economy. So I think you could find that very informative because, again, the late Bronze Age, what was the problem was the wood and tin, because it took about 1 part tin and 9 parts copper to make bronze. And when the supply chain broke down, in this very high-tech late Bronze Age, it's very similar to the semiconductors that we're experiencing problems right now. So I believe you could find a lot of information. We learn from the past if we acknowledge it. So that's at the SRS Rock Report. Now, getting to the silver, these four silver pronged attack. And before I get to it, I want to explain, maybe some of you have heard this from me already, but on Kitco a week or two ago, Philip Newman, who is the chairman of the Metals Focus, which is we see it right here highlighted. They do the analysis for the Silver Institute, in which they put out the World Silver Surveys. And they also put out the analysis for the World Gold Council, which is their demand trends. And so they said in that interview with Kitco a few weeks ago that there was a record 80 million ounce surplus. And so the Kitco interviewer kind of scratched his head and says, wait a minute, there was so much demand, you couldn't get supply. And but what he failed to mention is that the way the World Silver Survey shows its surplus, it does not include the ETF or ETP, which is right here. It was a record 331 million. And you could see that when we look at the World Gold Council, again, we see Metals Focus right here. They're one of the primary analysts. Well, the World Gold Council adds the ETF demand in their surplus deficit right here. So for some reason, the World Silver Survey, the Silver Institute does not. It's like an after effect. And so I think that's kind of disingenuous because we saw a record amount of silver. So if we look at what the World Silver Survey shows for 2018 to 2020, they're basically saying if you don't include ETF demand, there was a 27 million ounce surplus in 2018, 23 million ounce surplus in 19. a record 80 million ounce surplus in 21, and they're also forecasting about a 23 million ounce surplus in 2021. I'm sorry, this is 2020, and that's 2021. Now, same here, 2020. But if we include ETF demand, we had a 60 million ounce deficit last year in 2019, a 251 million ounce deficit in 2020, and a 127 million ounce deficit forecasted for this year if we include ETF demand. And so I think we need to include ETF demand because, as we've heard after the silver short squeeze, the JP Morgan had changed their prospectus that if there another event like this happened, another surge in silver SLV, silver ETF demand, they may not be able to get the silver. And the Aberdeen ETFs made the same kind of press release. So I think we have to include ETF demand. Now, these are I call it the four factors or the four-pronged silver attack. That's the silver, the battle that's taking place in the silver market. And I think it's going to be a big battle because when we see 2 or 3 times physical buying, because right now we had pretty good physical demand last year, but when we see 2 or 3 times that amount, then there's not going to be the available silver. And then if we see massive silver ETF demand, even in the SLV, it's going to cause a lot of disruptions in the ETF market because they're not going to be able to get the silver. So this is going to be another impact on the silver market. And then surging institutional demand. I think the institutions are still they haven't caught on yet to silver. They will. When they caught on, once they start catching on to the silver story, you just get a few large institutional buyers of silver, and then we're talking big moves. And then, of course, record industrial demand. Not only are we going to see more silver demand due to high tech and the move to green energy, which I don't agree with, but we're still going to have that. There's going to be more silver demand, and then we're going to see industrial buyers, industrial manufacturers, probably trying to stockpile silver if there's issues with getting supply. So this is the chart of the total world silver bar and coin demand from 2007 to 2020. And if you'll notice, this is what's interesting. The US and Germany last year accounted for 60% in 2020. So 6 out of every 10 ounces of physical bar and coin that were purchased last year, it's the United States and Germany. So these 2 countries were the largest buyers. A lot of people think China is a big buyer of silver. The government might be, but the people are not buying a lot of silver. So this is the chart showing the 5 leading countries that purchased silver bar and coin investment in 2020, according to the 2021 World Silver Survey. 78 million from the United States, 42 million from Germany. India was very interesting. They normally invest a lot of silver. They could be 50, 70, 80, 100 million ounces of silver in a year. But I'll explain what happened with India last year. And when they come back, gosh, when you see continued demand in US and in Germany, and you start seeing India start buying silver, it's going to really impact the price. And now what's interesting, Canada, about 8 million ounces. Now, according to the World Silver Survey, the Royal Canadian Mint, I believe approximately 33 million ounces of silver maples and Royal Canadian silver bars were made, fabricated. But Canada is only buying 8 million ounces of silver. So a lot of that silver is going to the US. Americans are buying a lot of Canadian maples, as well as other countries. So you can see China is about 7 million ounces. So they're in 5th place. Now, the reason why, 2 reasons I believe that India really pulled back on silver purchases. One, we see the price of silver in the rupiah is at an all-time high again. We had a high here in 2011 and 12, and it's even higher. It's at 2,000 rupees per ounce. So normally when the price goes up, we see a pullback in silver investment purchases by Indians. Another thing is they've been dealing with the COVID crisis, which really hit in the summer of last year, and then it's re-hit again. And they've had a lot of cases. It's starting to go down. So I think we could see a change in silver buying from India. So this is what happened from March to February. We could see before the pandemic hit, or right when the pandemic hit, a lot of imports into India, silver imports, 641 metric tons. But then, as they started to get hit by the pandemic in the summer, we could see demand and imports really fell. And this is unbelievable to see this low. I mean, this is in these 6 months are about 60 metric tons. I mean, you're normally seeing anywhere between 150 to 200 to 300 metric tons a month. So in 6 months, we've got 60 metric tons. That's how much silver investment in imports have slowed down. And so I think we're going to start seeing an increase towards the second half of the year. Now, this is the difference. This is the price in the United States. We could see, silver almost hit 50. So right now we're a little bit higher than 50% off the highs. But again, Americans are the largest silver investors in the world. I don't think many people realize that, and followed by Germany. And now I think with all this money printing, or let's say with all the monetary liquidity, Germans are very concerned about the problems with currency, as they had hyperinflation in the early 20s. So we're seeing Germany, even though they got to pay a high VAT tax, they're buying a lot of silver, physical silver, bar and coin. Now, what's interesting, I've been tracking the Silver Eagles. The last update was about, I think, April 13th, and they have not done any new updates in over a month. And I think the reason is they are changing over to the new silver gold design, Eagle design. But they're just not putting in new dies. I talked to James Anderson from ST Bullion. He knows a lot of the authorized participants, and it seems as if they're doing anti-counterfeit technology too. So it's taking a lot more time, and we don't even see any gold Eagles being sold in May. So I think once they start minting the new anti-counterfeit silver and gold Eagles, we're going to start seeing a lot of demand once again, which is the reason why, or sales from the U.S. Mint, which is the reason why we're seeing between $12 and $15 premiums on 2021 silver Eagles, because it seems like they were all purchased. There's no more of the old series left. So an interesting thing taking, now I talked about physical. Again, I think once we had a lot of physical last year, but when we start seeing 300 million, 350 million, 400 million ounces of silver physical, and that's, let's say Germans start wanting to purchase more, and Canadians, and we start seeing more from Asia, and the Indian demand starts picking up, as well as the US. That's the one factor. The second factor is a huge increase in continued increase in silver ETFs. Now, what's interesting, this was as of May 11th. We could see that in the COMEX, there was a 6.2 million ounce withdrawal out of the COMEX. And look at the iShares. When all these other ETFs in the last 4 weeks were adding silver, and of course, Sprott, PSLV was adding the most, the iShares, 11 million ounces. And we can see that in this chart here. Again, over the past 4 weeks, up until May 11th, the iShares ETF, we saw 11 million ounce withdrawal. In the COMEX, it was 6.2 million. And the ETF security was 700,000. ZKB was 1.3 million. Deutsche Bank has a silver ETF, 4 million. And then the PSLV, 7.5. So there seems to be kind of a war happening. I call it the battle of the SLV, or the battle of the silver ETFs. And I know the SLV added about 1.5 million ounces on Friday, so it's going to be interesting to see what happens this week. But even if all the silver is not in the iShares SLV ETF, when you get a lot of stock traders, retail stock traders that are kind of naive, don't really know about the silver market, and they see the silver price move up and they start moving into the SLV, they're going to push the SLV stock price up, which forces JP Morgan to go out and get more silver. Well, that's an excellent factor. That's an excellent pressure. And so when you start seeing more investors moving into all the silver ETFs, it's going to force them to get more silver. So it's actually a good thing. And if we notice, it's really not physical demand that drives the price of silver, it's ETF demand. And we can see here when the silver price was remaining in this flat trend, started in 2020, and then this is March 2021. This is the inventories of the silver ETF inventories. Yes, we actually see more buying of silver when the physical price goes down. But ETF, it's like traders move into something when it moves up. And so I think ETF demand is an excellent part of this four-pronged attack. And another thing, two things about the LBMA. Before 2020, back in April 2019, the LBMA total silver inventories, about 67% were other, and only 33% were for the ETFs. Well, that's switched ever since the price of silver started moving up. And now there's this thing about the Basel III rulings that are saying that the banks can no longer, they have to do 85% funding of their unallocated gold or silver. So this may be part of the problem, because a lot of these are winding down their unallocated positions. But I do think also after the pandemic, this pushed the price of a lot of things up. So what we see now, we see that the LBMA silver inventories are now 61% of the total. So again, if you get even more people moving into the silver ETFs, we push it up to 70%, 75%, 80, 85, 90%. That means that then maybe this other does not want to lease or allow the ETFs to use their silver. So this is a very important dynamic, which I think is going to help push the silver price up much higher. And maybe some of you saw this, that the LBMA made a mistake in March. They overstated their inventories by 3,300 metric tons. That's 106 million ounce mistake. And you could see it was dropped back here. But that's almost a 10% mistake. Now, was it a mistake, or was it done on purpose because of the short squeeze? I don't know, but it doesn't really matter. What matters is the silver market will continue to get stronger over the mid to long term. That's the important thing to focus on. Now, I talk about this is institutional ownership of the SLV. We could see, except for this one huge move here in 2016 when the price shot up, we could see it's been trending higher. There's a lot more institutional owners of the SLV. So I think this is just the beginning, and that's just institutions getting into the SLV or these other ETFs. Wait till they start getting into the mining stocks, the silver mining stocks, as well as the physical, because there may be problems with accessing physical. So I think once institutions start getting into buying actually physical, besides the ETFs, that's going to be another major factor. That's the third major factor. And we really aren't seeing a lot of institutional buying of silver yet. Now, the last factor is industrial demand. And maybe some of you have seen this chart. I've updated it. I thought we would see about 560 to 570 million ounces of physical and ETF demand for last year, but due to India really cutting back, that brought the number down about 40 million ounces. So this chart shows from the World Silver Survey, world silver industrial versus total physical bar and coin and ETF demand. Now, some years the bar and coin was higher, but we had outflows. So when you add them together, it pulled down the net number. But we could see since 2014, industrial demand has been moving up. It fell in 2020. I believe they forecast it's going to be over 500 million ounces. Again, that's high tech, EVs, a lot of things need high tech, needs silver. But this is the first time this has ever happened. Even the chart going back in 2008-9, when we saw a lot of people move into silver and gold in 2008, it was still nowhere near the industrial demand. So this is the first time we've ever had physical and ETF demand surpass industrial demand. I think this is just the beginning. There's just not enough silver. And that's the reason why, if you go back in history, look at our history, the U.S. Johnson, the reason why he signed into a bill to take the silver out of currency, there just wasn't enough silver. Industrial demand was increasing so much. They needed it to go into to feed the massive industrial demand for silver. So we took silver out of coinage and it went into the industry. So now we're seeing another aspect again where there's not enough silver, but there's no coinage really. Well, people have silver privately held in their homes or safes, but that's not public silver demand. Now, I want to talk a little bit about some of the financials because it's going to impact the precious metals. I don't think people really understand what's happening and how bad the financial system is. This is the global GDP versus total world debt increase, and it's from the Institute of International Finance, 2017 to 2020. We added, the world added 13 trillion in 2018, 5 trillion in 19, 24 trillion in 2020, and the U.S. accounted for a third, 8 trillion. The U.S., public debt of government was 4 trillion, a little more than 4. So private was 4 trillion. So the U.S. was 1/3 of that total. Now, in 2018, the debt accounted for 15% of the GDP. In 2019, it was 6%, and look what, almost 30%. The debt that was added last year was almost 30% of the GDP. Can you imagine if they didn't add that debt, didn't backstop? The markets would have collapsed. And I think we're still in serious trouble. Now, if we look at what that means in terms of silver, I estimate there's about 5 billion ounces of silver in the world. Investment silver, there's a lot more silver, but investment silver, it could be more. It could be 6 billion, 7 billion, but I'm going to say 5 billion. If we multiply that times 100, which a lot of investors would love, silver investors would love to get, that's 500 billion. Compare 500 billion for all the investment silver in the world to 24,000 billion or 24 trillion that was added just last year. Now, these numbers are getting so insane. At some point in time, more and more investors are going to wake up and move into silver because they realize at some point in time, the public is going to lose faith in currency. And we haven't seen that yet. And that's when silver moves and gold moves from being valued as a commodity to being valued as a store of wealth or store of value. Now, that's all the good news. And the good news is to me that we do things for the medium to long term. We don't have the lifespan of a gnat. And that's why I tend to joke about we don't live a few days or a few weeks or a month. We live for decades. And so we should look at silver and gold at kind of in that way. Now, I have to show you this because we're starting to see an increase in the commercial short positions. Now, this was 2 weeks ago, May 4th. We could see the short positions are increasing, 68,500 commercial net short positions at a price of 26.56. Now, this was the last one. Another big move up. We are now at 73,300, and this is when the price of silver was 27.67. Today, it's trading over $28 at 28.20. It may even go up higher. Now, I would love to see silver go up higher, but when we see this going on at some point in time, and it could be due to this Basel III rule, because a lot of these European Union banks have to get out of their unallocated positions by June 28th. And I believe the LBMA has till the beginning of 2022. But you would think you would see these numbers falling, but they're increasing. And I'm on the SRS Rock report, I talk about, I think we're going to hit disinflation or deflation in a market correction or a market crash. So while I do look forward to seeing higher silver prices, we could see a correction first. And with the overall markets, and that means lower energy prices, lower copper prices, lumber, steel prices. I think that's coming, and I describe why that's the case on the short-term basis. Now, one of the things, someone put out an interesting graphic, and he showed how starting in 1800 that wood was the leading source of fuel. And I explained that that's what it was in the ancient Bronze Age and ancient Roman Empire. But then in the late 1800s, coal came on, and then we had oil, and oil brought on natural gas here as well. This is not sustainable. And this is how much oil fell. About 9% demand fell, and that was due to the pandemic. It'll probably move back up, but this is the energy cliff I'm talking about. The global pandemic sped up the energy cliff. Global oil consumption declined 9% in 2020. Oil consumption recovery will be much slower than the market realizes. And I believe the collapse of oil production is going to be much faster, because ExxonMobil just wrote off a third of their oil. Royal Dutch Shell admitted that they've hit peak oil, and they have 9 years worth of reserves left. That's it, 9 years. And this is the problem we're starting to see now. And so this is the main reason why you want to own the metals, because energy, this huge increase of energy, is what's driving the values of most stocks, bonds, and real estate. And when these start to fall, when this production starts to fall, it's going to pull down the prices of those assets. The real store of value is physical gold and silver. So again, this is I look at the coming battle in the silver market, and we're just in the first inning, the first stage. When we see a lot more physical buying, massive ETF demand, and then we're going to start seeing institutional buying coming in, and record industrial demand, as well as industrial buyers stockpiling silver because they're going to need it. This is going to drive the silver price. And I always say this, even if silver shoots up to $50 or $100 quickly, you do not want to sell and get fiat currency profits. You only sell silver or gold in the future if you need to purchase something. If you want to sell silver for gold or gold for silver to play the ratio, that's fine. But we're not looking to time the market, and then when silver shoots up, because the energy is going to pull down the whole global economy. We're not going to continue to have new real estate booms and new cycles, because those days are over. Now we're transitioning from building wealth to protecting it. And those who understand that are going to stay in the precious metals. So I hope this video provided some insight to what I think is going to be the four factors that it's going to be the major battle for the silver market moving forward. But again, we still have to go by what's happening in the COT report is showing us on a short-term basis that the silver price is now, with the commercial short positions being at a high. If we do get this broader market correction, don't be surprised to see the silver price fall. I'm not saying it's a guarantee, but do not be surprised if we get a correction in the silver market. Well, thank you very much, and I hope you all have a good day.